Greetings, Inderes TV viewers and listeners. Nordea published its third quarter result today, and I'm interviewing Nordea Group CFO Ian Smith here today at Vallila headquarters. Welcome, Ian, to Inderes TV, and congrats on a good result.
Hi, Kaisa. Nice to see you, and thank you. Yeah, it feels good.
Could you walk through, first of all, what were the key highlights for Nordea during the third quarter?
So it was another strong quarter for Nordea. We posted a return on equity of 16.7%, and that's now actually the 8th quarter in a row where we've had a return that is comfortably above 15%, and that's our sweet spot. That's where we need to be. The highlights for us were that in a slow market, I think things are still a little bit finely balanced out there. We saw stable lending. We saw increase in deposits, increase in assets under management, and all of that helped to drive an increase in income year on year. So we're pretty pleased with the results.
Mm-hmm. And with the outlook for net interest income declining, do you see asset management as having the potential to offset the impact, especially with improving economic prospects and increased savings to lower net interest rates?
So I think assets under management are a key part of our business, and at 412 billion at the end of Q3, that's an all-time high for us. And if we think about it, our assets under management are actually bigger than our loan book. So that shows you the importance of that business to us. What we've seen with our customers now is they start to look much more at investment products as they see the rates coming down, and that's good for us. And what we saw in Q3 was also very strong net flows from our Nordic channels, from our Nordic customers into the asset management business. And our income from asset management, our savings income, was up 5% year on year. So I think all of that points to strong activity. And in a world where we will see lower interest rates and we will see lower net interest income as a result, it's helpful to have that income line coming up now.
Yeah, interesting. And net interest margin has shown year-on-year improvement and also remained stable over the recent quarters. So how did it perform this quarter?
So our net interest margin was, as expected, down a little bit quarter on quarter. So we're at 177 basis points compared to 183 last quarter. That's as expected because we've seen interest rate cuts. And that is contributing to a slightly lower net interest margin. But it's pretty stable year on year, as you say. The outlook for us is that we'll expect to see that come down a little bit as rates come down. I think lower rates are going to be good for our customers. I think that'll help to drive consumer confidence. People will feel much more comfortable about moving home and borrowing money and things like that. So I think that there's a net positive to come from lower rates.
Yeah, and with the recent decline in interest rates potentially boosting the economy, has Nordea already noticed any uptick in loan demand?
So I think some of the early signs are there. So we've seen an increase in loan promises. That's customers asking for the sort of ability to borrow, and indeed also mortgage applications. We still need to see the transaction activity improve, and I think it is going to take more confidence in lower rates to do that. People need to feel the benefit in their pockets. On the corporate side, we have a good pipeline, and we saw quite a lot of deal activity in Q3, even though it's normally a quiet quarter. So we feel ready, but we need something that's going to tip that over, and I think it is those rate reductions that will make people feel more confident to get out there and do stuff.
Yeah, that makes sense. And one topic we usually have in these interviews are loan losses, which were basis points during the third quarter. If I recall correctly, there were some provisions because of a few large corporate customers. How would you comment what were driving those loan losses?
So loan losses overall still remain very low, and I think that's a sign of the strength of the portfolio. That even in more challenging times, the portfolio performs well. I maybe correct you on one thing. In our large corporate business, we saw zero loan losses. Where we're seeing some of those loan losses, the ones you refer to, they're amongst the sort of smaller and medium-sized companies. And I think it's those that are a little bit more exposed to consumer spending and the slightly challenged economy. And so it's always where we expected to see slightly higher loan losses, and they're not at unexpected levels. But that's definitely where we see a little bit the signs of stress, and that's coming through. But overall, still, below what we think is our normal rate. So 6 basis points is below, 10 basis points, which is what we normally guide to. And I think the portfolio is in good shape.
Good to hear. Can this level of loan losses be assumed to be so-called like normalized level or going forward as well, or how do you see it?
So we think that in a normal environment, now we have to remember, Kajsa, we haven't seen a normal environment for quite some time. But in a normal environment, we expect around 10 basis points. So the 6 basis points we saw this time is a little bit below that.
Okay, that's clear. Given the recent disruptions Nordea has faced, what impact they have had on your business so far, and how is Nordea addressing these challenges?
So I guess, Kajsa, you're referring to what we've seen over the last few weeks in terms of cyber attacks, and as a result, we've seen some disruption to customer service. We're really sorry about when customers feel the pain here, but we hope that people understand that what we're witnessing here is really an unprecedented attack on Nordic society. And it seems to be very well funded, very well organized criminals that are behind this. So let me give you some statistics to show you the scale of the challenge. We in a normal 6-month period, we might see 20 attacks of this nature. In the last 35 days, we've seen 400. They are, we estimate, around 15 times more powerful than normal. Now, the good news is our defenses have been strong, and around about 90% of those attacks we've been able to push away. And then when, the small number that have come through, the way we've responded to that is to put up extra defenses, and that slows things down for our customers. But the important thing to understand here is that, the intent is to cause disruption to societies, and we're determined to resist that. And while it's regrettable that we sometimes see a little bit of disruption to customers and their ability to do the things they want to do, we're very focused together with the authorities across the Nordic countries to resist these.
And lastly, Nordea's cost growth is driven mainly by the wage inflation and also investments in technology and risk management, like you were also talking. Do you see these technology and risk management costs as a more permanent trend, or are they largely one-time investments, would you say? Or how should we see also view this going forward, especially after these recent service attacks?
Yeah, so our year-on-year costs were up 9%, and I guess we can split that between, say, 4% is inflation, and around 5% is investment, and even that 5% splits between, say, 1.5% is the integration of the new business we're acquiring in Norway. So around 3.5% is technology and risk management. We stepped up significantly in 23 and 24 our investment in those areas. We thought it was the right thing to do. And it does tackle things like information security and cyber defenses and other things. I think we're coming to the end of that ramp up in activity. We'll continue to invest, but we don't expect to see our costs grow to that extent next year. And we were pretty clear about that on the call today. So we're investing in the right areas. We think it's the right thing to do for our customers and our shareholders. We don't expect to see such substantial cost growth next year.
Thank you. That's interesting to hear. And thank you for the interesting interview, and good luck for the rest of the year.
My pleasure, Kaiser. Nice to talk to you, and thank you for that.